students amounting to 3,50,000, madam.
Okay, that's nice. That's really interesting to know that. I have not done a program with SIRC till now. That's why I thought, let me just understand more, because I think I've done multiple with WIRC and AIRC.
Yeah, sure, madam. Sure.
Okay, thanks for having us today. Thank you for giving us an opportunity for Social Stock Exchange. I'm good to go when you are.
Yeah. Rilvan, we have with us Mr. Rilvan, our technical person. Rilvan, are you ready?
Yes, sir.
Shall we start?
Yes, sir.
You start the recording.
Yes, sir. Started.
Are you ready with IC Moto?
Yes, sir.
Yeah. Shall we start?
You can start, sir.
Happy evening to all of you. Welcome to today's Investor Awareness Program on NSE National Stock Exchange, Social Stock Exchange, then NSE Emerge, fundraising for SMEs through listing. To take us through these topics, we have with us today Mr. Rachana Busari, and Vice President of National Stock Exchange, and Mr. R. Sendil Murugan, Senior Manager Exchange. On behalf of Office of SIRC, we welcome both of you.
Thank you.
We will start today's proceedings with the invocation of ICAI motto song as a mark of respect to the Institute of Chartered Accountants of India.
Yaesha sukteshu jagrati Yaesha sukteshu jagrati Purusho nirvimana Tadeva shukram Tadeva Shukrada Brahma Tadeva Mrita Muchane Asmin Lokaha Asmin Lokashaha
Christmas certificate.
Sarve Taduna Sarvachati Etadvaita 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 Etadvaita.
Thank you. It's my privilege to introduce both the speakers. Let me first introduce Rachana Busari. Ms. Rachana Busari is a postgraduate in financial management and law graduate with 23 years of experience with the NSE. Rachana is currently the Vice President of National Stock Exchange of India Limited and is responsible for investor awareness and social stock exchange initiatives of NSE. Her role includes empowering investors through education and awareness, enabling them to take control of their financial futures and contribute to the growth of the economy. She played a key role in formalizing the framework for social stock exchange to facilitate funding and growth of social enterprises. In her prior role, she led the primary market initiatives of NSE and was responsible for listing of debt equity shares of the corporates. She has worked tenaciously for development of securities market for small and medium enterprises by creating an enabling ecosystem. Represents NSE at various committees of SEBI for their policy initiatives. Let me come to the introduction part of R. Sendil Murugan, sir. Sir, R. Sendil Murugan is the Senior Manager of a National Stock Exchange of India Limited. He is an MBA postgraduate, worked for DNB TransUnion as a business analyst and dealt with CIBIL's back office operations since 2010, associating with NSE and handled equity and derivatives, fixed income and mutual fund markets. Presently, he is handling SME listing in Southern region. With this brief, I present before you both Mrs. Rachana Busari and R. Sendil sir to take us through NSE Social Stock Exchange and NSE Emerge fundraising for SMEs through listing. Over to you.
Thank you, Mr. Rahman, for setting the context and briefly introducing me. It's a great opportunity to be here today at the SIRC conference. And I think we all recognize the importance that the chartered accountants are playing as a vital intermediary, not only with respect to the for-profit enterprises, with respect to the audits, but also in demonstrating the impact that is being done by the not-for-profit enterprises. So kudos to ICAI for taking this on their exceptional work even in the areas of not-for-profit enterprise, and for creating the new SRO for the social auditors as well. So congratulations to ICAI for it. And I understand, I've been given to understand that multiple chartered accountants are now getting empaneled even as social auditors. So it's a great initiative by ICAI, and I'm very happy to be here today to enlighten the chartered accountants, because we completely recognize that chartered accountants play a pivotal role in thought process of a company institution that they are associated with, whether it is a for-profit or it is a not-for-profit enterprise. They not only help with the administrative and the documentation part, but they also play a pivotal role in making the founders and making the management team understand about what it takes to be a listed entity, or what is the capacity of an organization to be in the regulated space, and how they can navigate the process. So saying that, I will just start with my small background on the social stock exchange framework, and then I will also have a small PPT to take care of the final technical nuances of the social stock exchange. So good evening once again to all the participants of this session here. And today, as NSE representative, I'm really delighted to have an opportunity to share my thoughts on an exciting and transformative concept that is the social stock exchange. In the recent years, we've all witnessed a growing recognition of the power of capital markets in driving positive change in the society. While traditional stock exchanges have played a vital role in the economic growth, there has been a realization that financial markets can and should do more to address the social and environmental changes. The concept of social stock exchange is a pioneering step towards aligning financial markets with the greater good. It represents a paradigm shift where the traditional focus on financial performance is complemented by a deep commitment to social impact. By creating a dedicated platform for impact-driven enterprises and organizations, the social stock exchange aims to channel investment capital towards businesses that prioritize social, environmental, and governance considerations alongside the financial returns. So the social stock exchange framework, the idea was formulated by our FM in her budget speech of 2019, wherein she said that it was important for us to bring the capital pool towards the social cause, which should be under the ambit of SEBI. So with these words in mind, with these words, a working group was constituted under the leadership of Mr. Ishrat Hussain, which recommended about the broad framework that a social stock exchange should have in itself. Subsequent to the recommendations given by the working group, a technical advisory group was formed, which came down and listed down the finer nuances of the framework of the social stock exchange, and hence the final shape to the social stock exchange was given. And SEBI notified the regulations about the change in regulations in 2022, and they also introduced a newer security to facilitate the framework of social stock exchange. I'll just start with my presentation here. Can you please confirm if the presentation is seen?
Yes, ma'am. Yes, ma'am. Very much visible.
Okay, thank you so much. So we've already covered this, that it was a recommendation or a part of a finance minister's speech in 1920 for the budget of 1920. And the idea of social stock exchange was that it should be a regulated platform that brings together social enterprises and the donors. It should facilitate fund and growth of social enterprises, and it should be an enabling mechanism to ensure robust standards of social impact and financial reporting. So with these ideas in mind, the framework was designed and some regulatory changes were undertaken. The regulatory changes were undertaken in all the three pillars of fundraising, or I can say listing, which is the pre-listing, wherein the security was notified. A zero coupon, zero principal security was notified under the SCR of 1956. There was a change in the ICDR as well, where a chapter 10A was introduced to incorporate the provisions for registering and listing of a social stock exchange onto the NSE platform. And post-listing LODR changes were made to ensure that there is a regulatory framework available for disclosures that have to be taken care by the social enterprise under the social stock exchange framework. So the first attempt this framework made was to define a social enterprise. Currently, if you recollect, there is no definition for a social enterprise, but an endeavor was made through this framework that we define a social enterprise. So the social enterprise has been defined by three major criterias. One, it says, is that these social enterprises have to be working in the list of eligible activities. These eligible activities have been defined or have been identified from the Schedule 7 of the Companies Act, and they are aligned to the SDG goals identified by Niti Aayog. So primarily for an enterprise to be recognized as social enterprise, it has to be working in the areas which have been identified as eligible activities. These enterprises should work in those eligible activities and should have the target segment as a underdeserved or less privileged population. So if you are working in those activities and your target population is the underserved, then you are a good to go social enterprise. SEBI also introduced a concept of having a quantitative number to say that what kind of activities have already been covered, but what kind of revenues or what kind of uh, financial parameters should be there to say that this is a good to go social enterprise. So they said that if you are in one of the activities and you are serving the target population as identified under the chapter, you should also be having a predominance of your revenue generation or your expenditure or your customer base in one of these activities. So if you're 67% of either your revenue or your expenditure or your customer base is from any one of the activities listed by the Schedule 7, then you are in totality can be called as a social enterprise. Social enterprise can always be not for profit organization or it could be a for profit organization, but any kind of a social enterprise primarily has to fulfill these eligible activities and have to be in the areas that I have specified right now. SEBI also made an endeavor to say that there will be some ineligible activities which will not be qualified to be a social enterprise. So they said that if you're a political organization or if you're a corporate foundation, you're a professional or a trade association, infrastructure companies or housing companies other than affordable, you will not be eligible to be a social enterprise. So the 17 activities that have been identified by SEBI as eligible activities for demonstrating primacy of social impact are these listed here. So they cover mostly all the activities that have been aligned with the sustainability development goals over. So now once you have identified that it is a social enterprise by the criteria that have been defined earlier, the social enterprise, like I said, can be of two categories. It could be not for profit or it could be for profit enterprise. For profit enterprises, they will be the companies which are registered under the Companies Act of 2013 or the 1956. And for profit enterprises can raise funds using the normal mechanism that is available today. So a for-profit enterprise can come up with a main board IPO if they meet the criteria which is specified for main board. They can come and list on the SME platform, the NSE Emerge platform, if they fulfill the criteria of SME Emerge. Or they can also list on the IGP platform. So the primarily for-profit enterprise has to follow the same mechanism that is available today for a listed entity to raise funds, come up with an IPO and list themselves. And they can raise funds using the dilution of equity mechanism. They can also have debt issuance of securities, and they can list through those. All the disclosures in the DRHP that are applicable for profit enterprise today will be applicable for these social enterprises also. But social enterprises will also have to demonstrate the social impact that they have created. So over and above the normal disclosures, they also have to give disclosures with respect to their annual impact, with respect to their assessment, with respect to their eligibility on the basis of activities. So a for-profit enterprise, when it lists on a main board or on the SME platform, it will get merged with all the other existing companies. In order to have a distinct identity given to these for-profit enterprises, the stock exchange will give a separate flag that these are the companies which are being listed onto the main board or onto the SME platform as social enterprises. So for example, today you have a company listed on the main board and it is called ABC Limited with a symbol of ABC and a series of EQ. So you know that it is a normal company listed onto the main board. You have a company ABC Limited, but which is listed on the SME platform. Then you have ABC as a symbol, series as SM. You know the identifier that it is listed on the SME segment. For a social enterprise, you will have a flag that it is an ABC Limited listed on the main board with the series EQ, and SE will be the flag which will say that it is a social enterprise. So investors who are more inclined towards investing in such kind of companies will be able to identify based on the identifier or the flag that the exchange would have created. So this is going to be the big difference for a for-profit enterprise. Apart from that, their disclosures and everything will remain at par with what is available today for a listed entity to come and list and raise funds onto the stock exchange. Now coming to the not-for-profit enterprise. So today not-for-profit enterprises can exist in various forms and constitutions. They exist in form of a trust. They exist in form of a society, registered society. They can also come up as Section 8 companies. So how do these not-for-profit enterprises come onto the social stock exchange? So NSE for this purpose has created a separate segment, which is the SSC segment, the social stock exchange segment of NSE, on which the not-for-profit enterprises can come and list themselves or register themselves. Now there's one more additional facility that has been given for not-for-profit enterprise. The not-for-profit enterprises have a choice that once they establish the primacy of their social intent, their constitution reflects their not-for-profit enterprise, they can either register themselves or list. For registration, they have to give separate a set of documents, which are very easy. It's an online process that NSE follows. And once they submit all those documents, NSE will allow them to register onto the platform. And they can continue to raise funds how they have been raising otherwise without being registered also. So they continue to parallelly raise funds outside the stock exchange mechanism and be just registered onto the social stock exchange segment. But if a not-for-profit enterprise decides that I want to even raise funds using the stock exchange mechanism, the social stock exchange framework, they have an option to list themselves and raise funds using the platform. So now when the NPO decides that I want to raise funds using the social stock exchange framework, first they have to register themselves. After registering, they can raise funds. What are the options that are available for a not-for-profit enterprise to raise funds? Currently, the option available to them is the zero coupon, zero principal instrument. So the name itself suggests that a zero coupon, zero principal instrument, when issued by a not-for-profit, that means the investor or the donor, in whatever parlance we want to call them, will give money or subscribe to the issue of the not-for-profit enterprise, and lieu of the funds that he is given as a donation or as an investment in the not-for-profit enterprise, he will get an instrument called as a zero coupon, zero principal. That means there is no assurance of coupon, or there is no assurance of principal. But what he will get will be the social returns, because the not-for-profit enterprise which registers and lists onto the stock exchange has to make annual disclosures with respect to the impact that they have created out of the funds that have been raised and utilized. So this is the way that a social stock exchange platform will facilitate the not-for-profit enterprises to raise funds. They can register themselves, and post registration, if they feel that they need to raise funds using the framework, they can list themselves and raise funds using the ZCZP mechanism. Now, what are the salient features of a ZCZP instrument? So it can be issued only by an NPO, and it shall have a specific tenure. It can be made for a very specific project or an activity which has to be completed within a specified duration. So zero coupon, zero principal cannot be issued for lifelong. It has to have a tenure, and it has to have a project assigned to it. So that means if a not-for-profit enterprise wishes to use a zero coupon, zero principal instrument, they need to upfront say that this instrument is issued for what project and what will be the life of this project. Once that is declared, then the zero coupon, zero principal instrument can be issued. Like the name suggests itself, it is issued without any coupon, any principal, and there shall be no amount that will be payable on its maturity. And once the specific project or the tenure is lapsed, then the zero coupon, zero principal instrument will extinguish on its own. And the zero coupon, zero principal instrument has to be based on one of the activities that have been identified for it to be a social enterprise, for the not-for-profit enterprise to be eligible to be called as a social enterprise. So what are the conditions for issuing of a ZCZP? If an NPO decides to raise funds using the ZCZP mechanism, what are the conditions? That it will be issued only in the DMAT form. The minimum issue size that will be applicable for a not-for-profit enterprise to use this instrument and raise funds will be 1 crore. A minimum application of 2 lakhs. So that means any donor or an investor wanting to participate in the issuance of ZCZP has to subscribe at least to 2 lakhs. And for an issue to be subscribed, there has to be a minimum subscription of 75%. Conditions for termination of ZCZP. ZCZP shall terminate in case of the object of the fundraising has been achieved. Then in this context, a certificate will be submitted to SSC saying that the fundraising object has been achieved, and hence ZCZP can terminate. Or if the tenure has been pre-identified, then at the end of the tenure, the ZCZP shall cease to exist. Like in any issuance, fundraising issuance, there can be 2 ways that a fundraising can happen. It can happen through a public issue, and it can happen through a private placement. So is it applicable for a zero coupon, zero principal instrument as well? A public issuance of a zero coupon, zero principal can happen to institutional and non-institutional investors, subject to the minimum lot size of minimum subscription of 2 lakh rupees. Zero coupon, zero principal instrument can also be done a private placement mechanism, but the private placement can happen only to social impact funds. It cannot happen to others, other non-institutional investors or institutional investors who are not social impact funds. So private placement can happen only to social impact funds, which are registered as AIFs under the SEBI regulation. Once the not-for-profit enterprise establishes its primacy of social intent, and it is also qualifying the other criteria, we also need to see that what are the various documentation and what are the various other eligibility criteria that they will have to fulfill when they decide for registration. So, like I said in the beginning, the not-for-profit enterprise, the constitution can be in any form, but they will have to be demonstrating that they've been registered as an NPO. They will have to submit a certificate of their registration, and the certificate has to be valid at least for the next 12 months. They will also have to demonstrate who are the owners and who has the control of the not-for-profit enterprise. they'll have to submit several certifications like the tax exemption certificate, the PAN number, and they will also have to give the 12A, 12C certification, the ATG exemption certificate. So all these enterprises will have to submit the following documentation. Two very important parameters that a not-for-profit enterprise has to assess before they decide to register onto the stock exchanges: what has been their annual spending. In case their annual spending in the past 1 year has been more than 50 lakhs, and their funding in the current year, in the past financial year, has been around 10 lakhs, then only they should be taking this path of registration. The idea behind this number is to say that yes, there is a capacity, there is a scalability that the not-for-profit enterprise has demonstrated by doing a 50 lakh spending in the past financial year, and they also have a fund flow at least of 10 lakhs to run these projects. So that is why these two parameters are important for any NPO to assess that yes, I will be eligible to register. It's not important that you meet only the eligibility criteria of predominance of social primacy of social enterprise, or you are acting in one of those 16 areas, or you are serving towards a target population, but you also have to demonstrate the spending and the funding criterias as well to be eligible to be registered. So once NSE has provided an online online portal through which the registrations can take place, we can help on a one-on-one basis, or we can circulate the link where the registration formalities can be done through. Please feel free to reach out to us after this session in case you think that any NPO or any client of yours could be interested towards registrations. Let's now talk about what are the various disclosures that a not-for-profit enterprise has to make once they decide to register themselves on the stock exchange. For any not-for-profit enterprise registering on SSE segment of the exchange, they will have to make annual disclosures. And for a profit enterprise, they will have to make disclosures as per the existing LODR chapters. In case of NPOs registered, they don't have to make any quarterly disclosures or event-based disclosures. They only have to show an annual impact report by a social auditor, qualified as a social auditor, and this annual impact report has to be submitted on a yearly basis. But for a company or for a not-for-profit enterprise which decides to list itself by raising funds, they will also have to give statement of utilization at the end of each quarter. They will have to inform about any changes of material events that have happened, and they'll have to also submit an annual impact report. So what is the importance of social stock exchange framework for the not-for-profit enterprises? Why should a not-for-profit enterprise think of listing themselves or registering themselves onto the social stock exchange platform? First of all, it allows a performance-oriented philanthropy, because the moment you are a listed or a registered entity, it will add a lot of credibility and confidence to the donors, and also will provide them with a new set of donor pool, that yes, these are the people who could be interested and who are looking for performance oriented philanthropy, so they will get attracted towards the not-for-profit enterprises registering or listing onto the social stock exchange. NSE today has kept very minimum registration fee and listing fee, so while it's not a revenue model that NSE is looking at, but we have very minuscule listing fees and registration fee for the not-for-profit enterprises. And currently the disclosures have been kept very minimalistic so that we allow the not-for-profit enterprises to tap the benefits of this platform, acclimatize themselves to the regulatory framework, submit simple disclosures, but also because of these disclosures, they add a lot of credibility to themselves. So there's a lot of benefits that a social enterprise can think of by being a listed entity or a registered entity onto the social stock exchange. The donors and investors also find a value in the SSE framework, because they are able to now look at a large pool of NPOs and decide on which NPO they would want to participate in, which NPO they would like to be associated with, identify the cause that they want to be associated with, and accordingly make participation by participating in their issuance or by donating offline. Because it's a registered entity, they'll be able to see a lot of information and take a calculated call on whether they want to associate themselves with this cause or not. So the advantage to donors is they're able to have accessibility to larger pool of NPOs. Obviously, being a listed entity, registered entity adds a lot of trust and transparency, and that is what investors find comfort with, and they'll be able to, build better confidence while associating themselves with the not-for-profit enterprise. It reduces time and cost of due diligence because what we understand is that every donor who has significantly contributed to the not-for-profit enterprise undertakes a due diligence, undertakes an audit to understand what is the impact they have created. But if it's a not-for-profit enterprise which is registered on the social stock exchange, the donor may not have to get into this lengthy due diligence exercises that they get into, or assessment that they get into, because the NPO will have to get themselves scrutinized by a social auditor and make the annual impact assessment report on a yearly basis to the stock exchange for people to see what is the impact they have created. So this is going to help a lot of donors to reduce their time and efforts for due diligence, and timely disclosures and impact assessment. So investors will know, donors will know in a time bound manner. They can check out the disclosures, see the impact they have created, and assess the work done by the not-for-profit enterprises. So we see a lot of value proposition in this whole framework, even for the donors and the investors. That's it from my side. I'll be more than happy to take questions, and we can share this deck with the institute at a later date so that you all can refer it at your own convenience. Thank you so much.
Thank you, ma'am. First of all, I would like to propose a hearty word of thanks to our Rachana Busari ma'am for making excellent presentations and making this session interesting and meaningful. And thank you for accepting our invitation for this today's session, ma'am. Thank you, ma'am.
Thank you so much. Thanks for having me here. Thank you.
Thank you.
If anybody has any kind of queries, you can ask ma'am, and so that she'll be able to pose her Q&A session and can leave. Then we'll start our SME session.
Or else they can post their queries in the chat. We can also take them and reply to them at a later date. That's also fine. That's also fine with me. I think, Senthil, we can proceed, yeah?
Oh, okay, ma'am. Okay, ma'am. Sure. I'll just start then SME presentation. So eventually,
Sure.
after later on, if any queries come, we'll just note it down. We'll keep it posted.
Thank you so much, and thank you for having me today. Thank you.
Thank you so much, ma'am. Thanks
Thank
a
you,
lot
ma'am.
for your time, ma'am. So, sir, we can start SME next presentation, right?
Yeah, sure, sir.
Okay.
Yeah, your screen is visible, sir.
Visible, right? Okay. So, it's very formal good evening to one and all. So, before we start, most of you would have been just in the verge of completing course, as well as most of you would have in the part of practice and all. So this SME and NSE emerge platform for part of NSE is been specifically brought up for small and medium enterprises to get listed in exchange platform and raise fund from the public actually. So earlier, there was an existing platform. We call that as a main board. Most of you are aware that all the listed companies, your Reliance of the world or SPs of the world, all your LNTs, everybody they got listed in NSE in the main board platform. So the all bigger companies who wants to raise fund of 300 crores, 500 crores, 1,000 crores to come for the public issue, they collect a fund from public. And 2012, Government of India through SEBI and exchanges wanted to have a separate platform for SMEs to just get listed and raise fund from public. So that's the reason we have come up with a separate platform for SMEs to raise funds, through get listed themselves in the exchange platform. So this segment, NSE Emerge platform, is started in 2012, and it's like a main board. It is related by SEBI only. And separate segment in NSE, as like your main board, how we have all the companies that get listed and getting traded in the cash segment and all cash segment, other this thing, same like a separate segment, but only thing, all the stocks are getting traded in the same platform where your main board stocks also getting traded, and all the same trading members, and that's where it's all like all everywhere, wherever you have your demat account, individuals, that same trading account which can be get traded. All the trading members, stockbrokers in India are getting eligible to get provide the SME platform also as like a main board. So this is to give us short figures, facts and figures about where the platform stands as on today is like, as of now, there are 316 companies got listed, around 50,000 crores, 50,000 crores market cap of SME NSE platform. So till now, close around 5,300 crores fund has been raised in SME platform, and the average size of issue is around 17 crore. So in the platform, typically, so there is no kind of size being prescribed, but typically we are allowing starting from 4 crore of IPO size to, even till now there are about 105 crore IPO also happened. So on an average size, we are saying that 17 crore is the average size of fund has been raised actually till on the platform, and we have covered close around 21 different sectors, starting from your manufacturing, chemical, engineering, auto components, service sectors, and ITs, VFX, like that. Different sectors have been covered actually. So as until the date, we have migrated almost 120 companies into main board. So that I'll explain what is migrating to main board in the future slide. There are options given for SMEs. After listing in NSE Emerge platform, after some period of time, they can migrate to main board with very less, documentation of, compared than the main board actually. So when we talk about SMEs, so who are the, we call it as SMEs, who are the eligible companies, who can, what stage of company can get into this SME listing. See, if we go to SMEs, there are lot of too many definitions for SMEs. If you go to a bank, they have their own definition for SMEs. Go to a government side, they'll have their own SMEs. So here, the eligibility criteria is any companies paid up capital is less than 25 crore. So for example, basic criteria, first two is a company should have a minimum 3 years of operational history, which means 3 years of balance sheet should be having. Out of 3 years, 2 years should be profitable, and third will be the company's paid up capital, post-issue paid up capital should be less than 25 crore. So how it is defined as a company's post-issue paid up capital, if it is less than 10 crore, they should list only in SME platform. If their paid up capital is between 10 crore to 25 crore, either they can get listed in SME platform as well as the main board platform also, based on their based on their size of the issue and size of their valuation, all these things. And if their paid up capital is more than 25 crore, they should compulsorily get listed in main board only. So why it is different? Some of the companies, if you see their top line, their turnover will be around 1,500 crores, and they do make a profit of around 40-50 crores. But if you see the paid up capital will be around 15 crores only. That time, though, they have a choice of either listed in SME as well as main board also. So that's how it get differs like. So in this is a very simple criteria. Government and SEBI has been fixed actually. So exchanges have been kept as for SMEs. So here, if you see any startup companies, they come up with that, they come with their owner's capital, and typically, source fund from their friends and family. You go to next stage, typically banks are supporting them, and the government is giving a lot of schemes, seed funding, and all has been coming into place. And again, large companies, as I mentioned earlier, they go to main board. So the company which is in a growing phase, they are, the right kind of candidate for this SME listing forum platform. So why now? Why this particular stage they should come in actually? So because if you get into a kind of SME listing thing, and the ultimate goal of any corporate is could be raise funds. So that's where people looking for, as I said, growing phase may. So any company who just got set up their unit and just to get into that the industry market, they set up all those R&D. They come up with the kind of solution to the particular industry. They create a new product and everything. So end of the day, after setting up everything, they get a reach to the market. All those things after some 4 years, 5 years, they got stable in the market, and then they started getting a lot of orders into the system. Actually, that time they'll get stuck in the for the working capital or even expansion of the business. All those things. That's where they're looking for the funding. So here, when they go for a funding options for emerging companies, the conventional mode of fundraising is a bank loan. So it is a bank. Typically, they go for a bank loan. So in bank, there are series of getting advantage, and as well as some kind of they get their own problems in that. Which is that nothing but actually, if any company you're raising funds of 10 crore, 20 crore from as a debt, whether they're servicing, whether they are performing or not, they have to keep service to the debt. Actually, there are constant cost for the debt. But here, nothing like it. Here, actually, since we started raising fund through equity, the equity shareholders, public who invest in the company, they're becoming kind of equity shareholders. So they take you becoming owners of the company. So when we started getting more business, profitability goes high, then we can issue a dividend to them, or else their stock value will go high and they get benefit out of it. Simple thing. There's no kind of fixed outflow of cost for borrowing as like a debt in the system. That's why it is a very efficient way of raising capital. So that's the kind of core objective for any company to get in. And second thing, the moment you get listed, the visibility goes high. So as of now, any SMEs, they're one among the more than 5 crore SMEs got listed in India. But the moment you got listed, you're one among the kind of 6,000 companies got listed in India. So that's the kind of visibility you get it actually. So and through that, your credibility also will go high. So as of now, though we are not listed, mostly particularly geographically or our vendor level or client level, we might get familiar actually. The moment you got listed across India, our name reaches out, and when we start reaching about new vendors and across the borders, even beyond borders, and so our visibility goes high. Any of your client might be kind of an import export, or if they wanted to approach a new client and out of country, if the client wanted to check the background of the company, the moment they check that is a listed company, the credibility is little high. That kind of edge over the benefits they get actually. So it's where listed companies all like getting higher advantage over the unlisted companies, and you get appropriate valuation to your company. So as of now, any company, manufacturing company or any unit, if you calculate the valuation of the company, you're more of your machineries, buildings, factories would be the kind of value they make it. But there is no proper valuation for your business. And that's where the moment you got listed, our market capitalization has been like captured every day basis, so that any time if you want to have kind of a business valuation of ours, we can have it. That's a kind of very big advantage of this this thing to getting listed into the exchange platform. And there will be a proper corporate governance in place. So if you see any of the SMEs, whom your client you work with, more of almost 90% of the SMEs are owner managed business, single man or a family managed business. So that now decision making all happens on based on their their own interest as well as their own kind of ideologies. When we have a listing company in hand, there is a board which completely carrying professionals will be now take care of the business actually. That way the corporate governance will be set in place. And the moment you got listed, your shares become collateral. As of now, the private company, the shares are just like listed. Keep it in the demat account, or in the as if it is a physical format, that will be lying with their cupboard. But the moment any SME got listed, the shares become collateral. Even they can have more borrowings by using the collateral. So that's the kind of advantage they have. And liquidity became very easy after any company got listed on NSE platform. Further, after 3 years, 4 years down the line, they want to raise a further fund flow. Just again, they can dilute the 5% or 10% of the equity. They can raise funds from public. And even all the corporate actions like your major acquisitions, join with the company, strategic tie-up with some companies, all will be becoming very easy. And most importantly, our borrowing terms will be much easier for the SMEs because the listed company having the kind of higher advantage. So that your borrowing terms are much better. And by way of giving ESOPs and everything, companies can have a higher caliber employees. That's where this thing. And the companies are getting to have access to the wider capital, where till now debt or even a closer group of rising funds only will be there. But the moment you got listed, there are multiple avenues opened to reach out the wider capital. And third, very important point which I discussed earlier, migration to main board. So what happened, at the moment you got listed in SME platform, you have to be there a minimum 3 years in the platform. Once you become 3 years in the SME platform, there are provisions to migrate to main board with having a very minimal documentation, not even maintaining, carrying, meeting the complete eligibility criteria of main board criteria, main board listing criteria. That's the kind of an edge or advantage for any SMEs to look into that. So if you go to main board now, any company want to get main board, they have to wait for a long time to grow that level, to rise their top line business into 500 crores, 800 crores, 1,000 crores, started having a profit of 20 crore, 15 crore plus year on year. Now any smaller company who has business of say 25 crore, 30 crore, 100 crores, these kind of companies, they can just list themselves in SME, and they can just if after 3 years they can migrate to main board with a very simple documentation. That kind of that's a bigger advantage is being given here. So other than that, we don't see any kind of bigger flaws in the or even negative in the market. But see, we have just mentioned paying is nothing but share earnings. That is nothing like it. Sharing our earnings with our equity shareholders is almost getting higher valuation. The moment you give more dividend, getting sharing through dividend, the more a company shares value will get increase actually. And this again, this eligibility criteria we have discussed already. So I know this 3 years operation history should be there, because who all can be any of you practicing people among you, we check with your listed company, clients of yours. 3 years of operation should be there. Out of 3 years, 2 years should be profitable, and past net worth will be zero. And as I mentioned earlier, their paid up capital should be less than 25 crore post-issue paid up capital. That's a very simple criteria to get listed in in the NSE platform. And if you see regulatory framework, we have discussed about what are the advantages, all those things, what are the value addition, what NSE platform can bring into a SME companies. But when you look at that regulatory framework wise, it is minimum 50 allottees should be there. Compare them, main board IPO of 1,000 allottees. When you go to main board, there should be many thousand applications be there for the IPO. But here, here 50 allottees is much enough to do that. So that way, we have very close group of investors that can also get into it actually. And high loose was at least 25%, which is very comparison, very same actually. So 1 minute, sorry. So as of now, the promoter is 100 before listing. The promoter is 100% owner of the company. The 100% shareholding with the owners only. When they come for a listing, they should dilute minimum of 25% of the shares to the public. So precisely saying that at any point in time, promoter and promoter group should have a minimum of 75%, sorry, maximum of 75% only. So that's the kind of setup been given. So when any company come for a listing, they should dilute minimum of 25% to the public. And DRHP is the same format. The daring prospect should be in the same format of main board only. But the only thing that it will go like to approval only to the exchange level only. So it will not go to SEBI. For the main board, it has to go to SEBI for approval, but the approval takes place only at the exchange level only. And there is no rating required for any SMEs to get listed in this thing. And one more additional advantage in this thing, 100% underwriting. Most of you have heard about underwriting or not. No, 1 minute. So any underwriting is like, if anybody go to main board, so 15% for merchant banker to get underwrite is compulsory. So here, 100% underwriting is the 100% underwriting is the 1 minute. 100% 1 minute message. 100% underwriting is compulsory. So that way, what happened? Any merchant banker, take that kind of mandate with you on their opening issue after getting approval from SEBI, even exchange. That issue will be taken care actually. So the subscription is almost kind of guaranteed because there is a underwriter will always give 100% underwritten. That's a kind of bigger advantage for any SME companies to get listed in NSMH platform. And one more entity called market maker in the system. What market maker normally does is they actually be in the system. For example, like from the date of listing, they will be there in the system market actually, and give two-way quotes, buying and sell quotes for the same stock in the on every day 75% of the market timing. They'll keep giving the two-way quotes just to give a liquidity in the system. So regulator, what actually they wanted is like any retail customers who invested in the company, after 2 months, 3 months, 1 year down the line, they want to exit in that investment. There should be liquidity in the system, right? There should not be like stocks is not being traded. All those things should not be there. That's where they want any company coming for listing. From the date of listing, next 3 years, there is a market maker who give two-way quotes on every day, 70% of the market timing. That's the kind of arrangements being done. So all to just safeguard the investor community also. So that's the kind of framework of being given in the IPO this thing. And post-listing compliance is one of a thing. So compared to main board, the post-listing compliance is very minimal. We main board also nowadays, we all given all kind of more of a electronic way of submission only. Even here, main board, if you see, every quarterly once you have to publish the results. Here, nothing like that. Here, you can just issue a. You can just submit a half-yearly ones only. That once in a year, you can just give a audited results to be there, and half-yearly you can just upload in your website. Not even need to publish. Just need to upload in your website and submit to NSE. That's a simple thing. And corporate governance only as per norms of the main board, SEBI allowed their guidelines, whatever comes that way only. And migration, we already discussed what is migration to main board. And investors, per se, if you see what regulator is mentioned here is like, minimum investment in SME stock for investors is minimum is 1 lakh, which means even it is IPO as well as the secondary market after listing also, which means they have to buy in a as per lot size only, which means that like SBI they buy own shares or Reliance they buy own shares, like that they can't buy single shares. They have to buy 1 lakh and multiples of 1 lakh only. So that way, that's the kind of they wanted to have a informed investors in the market. That's what kind of so since SME saw kind of risky investments, so the regulator want to have a informed investors in the market. So they just kept as a 1 lakh as a minimum lot size of anybody to get into SME investment. And nominated investment like PE funds, QA base can support underwriting and market making. That's what we given. And that's the kind of more about the framework and that value proposition from the exchange side. But if you other than that, NSE side, we got what we're giving, awareness. We've been kind of professional bodies like ICAI, like you and ICAI, industry associations, a lot of things, clusters. We've been covering up with a lot of tying up with a lot of associations and keep putting awareness, because you would have seen that there are about 316 companies got listed in NSE emerged till now. But if you see, 2012 it got launched. From 2012 to 17, if you see around, there are only 11 companies only got listed across India. And later on, 17, 18, 19, we got some 50, 60 companies, and 19, 20, around 100 companies got listed. Again, COVID has come. Now, last 2 years has been going very well. So the reason why the earlier stage was the first 5 years, there was not much response because, 2 reasons. One is that I would say first is the awareness level. The awareness level was not there with the SMEs because people all that think that listing is only for bigger companies, not for us, that way only. So even the compliance will be more high, whether become listed company that so we have to follow a lot of procedures, all those things. So we have to keep giving awareness across the doing such a kind of sessions with a lot of corporate associations, reaching out a lot of professional bodies like you, creating more awareness. We kept saying that it's very simplified, and we have a huge avenues open for smaller companies raise funds, effectively raise funds. That's what is happening now. And second thing that even the books were not ready even that time of now, because in India even most of the corporates work in taxation model, not in the wealth creation model. So they have to prepare their books to get ready to get listed actually. So that's where they took time. And now that even the momentum has started, the market has got matured now. Even you see that Ahmedabad market, Ahmedabad, Mumbai, and Delhi, and all. Every year we get close to around 70 to 100 listing happens in each locations. Compared to the comparatively south, and little conservative in nature. We just started, now till last year it was little slow pedaling only in terms of markets in listing size. I was mentioning, but more of the last 1.5 years, the momentum has started in south also. We have started receiving a lot of inquiries, a lot of companies been coming in. A lot of chartered accountants started working with us actually. It's kind of different avenue for us, them to give a lot of peer review auditing and financial due diligence and bring companies into the system. There are a lot of new business and revenue models being open for chartered accountants. So that's the that's where a lot of people started working as. We've been doing working with almost, I would say, all cities and across south. We have hundreds of chartered accountants tying up with us now actually. So a lot of people are getting proposals, giving proposals. We are closely working with people. That's the reason actually we wanted to connect with SIRC also to do that. And even if you see Tamil Nadu specifically, even we have signed MOU with Tamil Nadu government. And unlike nothing nowhere in India, Tamil Nadu government is giving 30 lakhs as a subsidy for any SME company to just on the listing expenses. That's one of the big thing happening in Tamil Nadu. So that's kind of almost covering the cost of IPO also for any company do it. So this is just kind of we have actually 2017 we have introduced index of in NSE emerged the all stock index at the time with 1,000 points. If you see within 6 years, that from 1,000 it has gone up around more than 7,000 points has come actually. That's kind of a growth SME stocks have been given in India, and different 21st plus industry which I mentioned, right, as like construction, consumer services, capital goods, healthcare, FMCG, automobile, auto components, telecommunication, like that. Different sectors have been covered actually in this thing. So typically this is the kind of all about SME image. So anybody just want to get listed in SME, what they should do is like typically they should just contact NSE team. It's like I'm here. So even my details there with CRC team, my numbers and everything, you can share with the team through the circulars or even like with the group or something. Anytime any individual cases discuss or you need more clarification, I'm happy to discuss with you, meet you with your clients, able to do it across anywhere in South. We can do it actually. And if any company typically want to get listed, this is the kind of simple steps being given. Like we are, when you introduce a company with us, we'll connect you with the company with the right intermediaries like a merchant banker. There should be a SEBI registered category 1 merchant banker, the one who can do the entire process for listing. And then they'll appoint all the intermediaries. Then you have to prepare the offer documents. The documents should be filed with NSE. Once they get the NSE will do a due diligence. And once we give the in-principle approval, listing happens actually. This is simple process steps of getting listed. All this entire process will get place in 3 to 4 months of time, in average time. See, we have listed a company in 45 days also. We have listed a company in 6 months also. So the average period is 4 to 3 months is the average time period for any company to get listed actually. So that's it actually from my end, Crisply. So anybody want to have any kind of a queries, I'm happy to answer you.
As of now, there is no question yet.
Okay. Not an issue. Anybody, just kind of like you can just contact me, personally. You can share my number with them. Even if anybody wants to have oh, sorry, any specific queries, I'm happy to answer them personally also. So can we close the session? So I would thank CRC team, for giving us the opportunity, to reach you all out, address you all. Thank you so much.
Yes, sir. Thank you, sir. First of all, I would like to propose a heartily word of thanks to our Senthil Murugan sir for making excellent presentation and making this session interesting and meaningful. And thank you for accepting our invitation, sir, for today's session. Thank you.
Thank you so much. Thank you.
Thank you.